I don't know if you guys saw my video yesterday, but today I'm going to go over the stocks that I bought and show you how I invested $10,000. It's an example of if I were starting a portfolio, what I would look to do, and probably some things that I would actually buy. So I did to see how it works out and share it with you guys over the next months, years, however long we continue and show it. Good afternoon. My name is Adam Kahn, and I'm the Rational Investor. Today is Monday, November 20th. Hope you're all doing well. Thanksgiving coming up, so super excited about that. Getting a little chilly here in Vegas. The wind's blowing, um, but still okay. It's not terribly cold like the rest of the country. Before I get into the video with the 20 stocks I bought and what I paid, and I'll go over it a little bit more in detail today, do me a favor. If you haven't already, hit the subscribe button, give a thumbs up, and make some comments. I love hearing the conversations and talking about it. It's kind of what got me started on this video of showing how I would invest $10,000 and what I would put it in and going from there. Also, I'm going to put a couple links in the description on how to open an account at SoFi. If you deposit $10 or more, they're going to give you a $25 gift. They're also going to give me a gift, which it's an account that I opened up with my son. He's 13 years old, and I try to teach him about this stuff. So it's kind of cool to see when it happens. He gets really excited, and it makes it a little bit easier in terms of teaching him and getting him excited about all of it. I appreciate the support. I appreciate the kindness. It's super cool, and I love seeing how the channel's been growing. I can't thank you guys enough. So anyway, let's get into the video and I'll start going through the stocks and talk about them a bit. So my total deposit into the account was $10,000. My total spend so far was like 9,700 and change. It was just under 9,800. There was about $200 left over. I'm not really going to do anything with it. I bought a total of, excuse me, I bought a total of 20 stocks, around $500 plus or minus of each one. You know, my real thought is whether I'm investing $10,000 up to probably even as much as a million, you, I don't want a whole lot more stocks than that. I want to see if I can outperform the market. Now, that being said, you guys really need to do your own research on this stuff. Don't listen to me. When you're making investments, you need to decide for yourself, contact a financial advisor, whatever you need to do. And with that being said, if you're seeing comments about Miss Mary or this one or that one, I hope you guys know that that's total nonsense. Please don't reach out to them. I don't even know what it is, but I can tell you it's nothing you want to be involved with. And if they really could get the returns that they say they're getting, people would be doing it and getting those types of returns. My guess is it's some scam to take your money. Um, that being said, though, with your investments, you need to decide for yourselves because we're all at different stages in life and everything else. I watch this guy Azul, who I love. I really like his stuff. I wish I knew the name of his channel because I'd give him credit and whatever else. But he talks about retirement a lot. And the thing is as great as the information is, everybody's circumstance is different. Like, it doesn't fit me in a lot of ways because there's certain things in my life I still want to make sure that I can pay for. My son, I want to be able to pay for his college if I can so that he doesn't have any student debt. I want to pay for his wedding. I want to help him with a house purchase. And those things, you know, they could be rather expensive. And I want to make sure I'm on the path to be able to do that and retire off of dividend income or something similar. So I know that I have really high aspirations with it. I was really lucky early on to be able to get started in that direction. I just pushed to get that, whereas some people don't need that much. So you really need to do the research for you because you're going to be in a different situation than me, and you're going to be in a different position than somebody else, and so on and so forth. So I'll talk about these stocks. I'll kind of explain why I bought them and what was going through my head. It's a mix of growth stocks. It's a mix of some dividend stocks, and it's even some mix of ones that I hope, you know, are home run type of stocks. These are in no particular order. The first stock that I bought was Amazon, and I bought 4 shares. My cost basis when I bought it, I bought everything at the market this morning. Came out to $580.32. That's what I spent on Amazon. I think Amazon is king of retail in some ways, and even more so, they do their own delivery. They have Amazon Web Services, and they've expanded into other things. Even though they're already mature and they've grown a ton already, and people might feel like they've missed the boat, I think they're one of the best companies out there, and I really try to stick with buying what I think the best of the best is. The next one that I have on my list, and again, in no particular order, but this one happens to probably be my largest position in my own account separate from this as well, is Meta, and I bought 2 shares of it. My total spend was $669.50. I think Meta is the greatest. I think they are undervalued. I think people don't like Zuckerberg, so I feel like it's always the case. They're continuing to do incredible earnings. They're a cash cow. It's Facebook, it's Oculus, WhatsApp, I think, their Instagram, and he just keeps growing and growing, and the growth rate's like 20% or so, and the PE ratio is right around there, a little bit lower as well. So even though people feel like it went from like $80 to 330 or today 340, and it's had a huge move, the reality is even where it is today, I think it's really reasonably valued. So I still see Meta as a good opportunity, and I think it's going to continue to grow. Next on my list is Starbucks, and I bought 4 shares of Starbucks. My total spend was $420.56. Forgive if you see me looking down, but I have my cheat sheet, my piece of paper down there. So Starbucks to me reminds me of McDonald's when I was a kid. It's already a mature company. There are stores everywhere. But when I look at McDonald's, I've told the story a zillion times. You could buy it for $23 a share back then. It's had multiple splits. Now, this is over 30 some odd years, but a $2,000 investment would be over $250,000 today. Now, I'm not saying Starbucks is going to grow like that, but the way I look at the company is really similar. It's in a good space. A lot of kids go there. They know what they're going to drink, and as they get older, they're going to continue going there unless something radically changes. They're also expanding outside of the country. I see tons of room for them to grow, even though they're a pretty good mature company, and they have a little bit of a dividend. So that's kind of a nice thing to boot. So I picked up 4 shares of Qualcomm as well. My total spend on Qualcomm was $517.76. They're in the chip space. I know they're not NVIDIA. I own that separately as well. It's not Intel. It's not AMD, but they do the phones. They have some contract with Apple that they're supposed to be able to do 20% of their chips in the phones until I want to say 2027. So there's potential that they're going to continue and they're going to have good earnings. They've raised their dividend for 21 years so far. So another 4 years and they get into the dividend aristocrats. I think Qualcomm's a great company and it's reasonably priced as well. It also pays a 2 or 3% dividend, which is kind of nice also. I then bought 10 shares of Bristol Myers. My total spend on it was $493.20. Bristol got beat up pretty good today. The drug space is a little bit off, but they pay a decent dividend. They're a great company. I got no issue whether it goes up or down. I think it's a good long-term hold, and I think that the pharmaceutical space right now seems to be pretty out of favor. I like them. I like Pfizer. I think actually it's one of the ones I'll get to what I spent on it as well. Um, and I like AbbVie, even though it isn't one of the ones I picked in this account. I have in another one. But Bristol Myers does a great job. I got no issue with any of it. Again, it's another one that pays a dividend. I don't expect it to have huge growth, but that's why I said I tried to pick an array of different companies that'll grow at different rates and have different benefits and different things that aren't so great about it. So I bought 8 shares of Best Buy as well for $544. I really wanted to buy Target, which I've been touting in some of my other videos, and I own it in my other accounts. And the thing is Target just came out with their earnings and they crushed it. But Best Buy kind of goes in the same category of I think retail's doing just fine, and it's so out of favor right now that they've gotten crushed. It has a decent dividend. I got no issues with Best Buy, and they haven't reported earnings. I think it comes out tomorrow or the next day and I'm hoping similar. I don't expect the same thing as Target, but I think they're a good company, and I think people have undervalued retail altogether just because they keep talking about how bad the economy is going. So I'm hoping to see a nice bump when Best Buy comes out with their earnings, and we'll see from there. So next is Google that I bought 4 shares for $534.48. Google's one of my favorite too, which is where, YouTube, they've got a huge array of stuff. It's not just the search engine. Google's got a lot of hands and a lot of pots. And I think they're like the blue chip of that space. I think they just slowly keep chugging along. I think they're reasonably priced, which rarely happens. I feel that way about a lot of things. despite all the news making it sound like the economy is gloom and doom, I don't really see it the same way. CPI showing that inflation's slowing, but these companies are still posting good earnings, and they prepped everybody that they're not going to be that great. So when they come in decent, it's a nice surprise. I love Google. I think it'll continue for a long time. So I know I started to mention it, but I bought 15 shares of Pfizer as well, $448.20. They're paying an over 5% dividend right now, and they've already prepared people for bad earnings. I don't want to say bad, but they've lowered expectations a few times. Even with the lowered guidance, I think they're really well priced and a good opportunity. Um, Anywhere around $30 a share seems great, and it's not going to be some high flyer that people are going to get excited about. But I think what you'll see happen is in a year, it'll be 34, 35, $36. Well, that's 15% return, plus you're getting a 5% dividend. Nobody will notice, nobody will pay attention. But that's what I think happens with the companies like Pfizer. They're not going to double or triple or go crazy, but if you can get a 15% return and a dividend on top of it, I think that's a great opportunity. Again, you guys need to do your own research. I might be wrong on it. Don't follow me simply because I say it, but look around, do whatever research you like, see if you agree or don't agree, which is all cool by me. So another one I picked up was Nextera Energy Partners. I've talked about it in a lot of videos. I really like Nextera Energy Partners here. It's fallen from $80 or over $80 to about $20 a share. Maybe they have some underlying problems going on, but it drifted from like 80 to high 40s, low 50s, and then it started to announce that they don't expect the growth rate of the dividend of what they were saying before. Originally, they were talking about 12 to 15% percent growth, but they've lowered that to 5 to 8%. Well, for the people who are buying it based on the dividend growth, makes a big difference. It plummeted the stock to $20, which is giving it a 15% dividend. So if you could get 15% that then grows at 5 to 8%, that's amazing. If I was more comfortable, I'd probably put every penny I had in something like that. I'm not, you don't really know what's going on. And again, please don't go out and do that. But I bought 20 shares. My total spend was $460.40. I think it's just a good shot. There is risk there, so don't go too crazy with it. That's why I wanted to make sure to say that as much as I made the comment. Next on my list is another one I've talked about a few times, which is QSR. I bought 7 shares. I spent $495.95. They're a conglomerate of Burger King and a bunch of other fast food companies. I think they'll just do just fine whether the economy goes up or down or whatever. They also have a 3% or 4% dividend as well. Not one I expect to double or triple, but I think they own a bunch of good companies and they should continue to grow over time. I also bought 10 shares of JEPQ, which is JP Morgan's NASDAQ fund. I paid $490.10. I actually sold JEPI and JEPQ in my main account. After reading the prospectus, now it may fit you guys, I don't know, and I'm going to keep it in this account. For Jepq, they hope to grow at 5 to 8%, and they limit how much you're actually going to make because they sell calls against underlying stocks. Well, they still have the risk of the market going down. It's a synthetic type of trade, so in some respects they're a little bit hedged, but I don't want to limit my upside because I get a dividend. It's also been paying a higher dividend because the volatility has been higher than what they estimated when they came up with the with the ETF, but if it does what it's supposed to, it's going to make less than what I hope. Now, it's still just fine. There's nothing wrong with it. I'm going to keep it in this account, but just for full disclosure, I actually got out and got into other things in my other accounts. So I also bought a stock ticker PFFA. It is another dividend paying stock. It is Vertis preferred stock something or other. I like this one better than JEPI, and it's actually one of the things that I put more into when I sold JEPI and JEPQ. For this account, I bought 25 shares and I paid $477.50. Pays approximately a 10% dividend. I wouldn't expect the stock to go up much, if anything. What I really hope is that I get the 10% dividend and the stock maintains value so I don't lose equity. And I'm able to use that to buy other things as well. It does pay monthly. we'll keep an eye on it as we keep an eye on the account. Next on the list is one of the ones that I see as a little bit more of a risky investment. I bought 22 shares of Foot Locker and I paid $482.54. What I like about Foot Locker is it's been out of favor a long time. The new CEO, and she's not so new anymore, it's about a year now, maybe a little bit longer, is Mary Dillon. She used to be the CEO of Ulta Beauty and really totally expanded them. When she left Ulta Beauty, she contacted Foot Locker, from what I understand, if the information's right, again, do your own research, because she wanted to work for them. I don't know what she saw in the company. She started working for them when it was $37, $38 a share, I'm guessing, and it fell down to about 18 after the first few quarterly reports weren't as good as people were hoping. I still plan to give it a good amount of time, and I think if you stick with it for a long time, just one of those things that really might surprise people. I don't know what she has in mind to grow the company. On top of that, it pays a 40-cent dividend, and the stock's only $23 after today's close. Pretty good return. I want to say it's 6%. They can afford to continue to pay that dividend, and the stock actually does what I'm hoping. You could really hit it out of the ballpark with a company like that. So I also bought 10 shares of Zillow. I spent $390.90. I talked about Zillow in my video about hitting the three stocks, hitting it out of the ballpark. Just a long-term view that I have for the company of what I think could happen with the NAR lawsuit and what's going on with real estate in general. I think if they're able to pick up market share and continue to grow the company, if you give it a 5 or 10-year time horizon, could be really surprised how it ends up turning out. Now, maybe it isn't, it's a real shot, and it's not something I would put a ton in, but to buy 10 shares and mix into this portfolio, I think it works just fine. I also bought 5 shares of Enphase, ENPH. I spent $466.90. Enphase is part of the solar industry. I had solar put in my house. I tried 4 different companies. Tesla, SolUp, Sunrun, and one other. The interesting thing is all of them made, well, not Tesla, because Tesla only talked about itself. Um, all the others talked about the components for Enphase and really went on and on how they felt like it was the best. Now, they also talked about how long I plan to be in the house and everything else. And along the conversation, I don't know that it made sense, because just because their components are better and they'll last longer, if I'm only here 20 or 30 years, it sounds like some of the others are just fine. But I get the feeling that they're top in their space. I don't know a ton about it, but it's really performed well the past few weeks. I've been really lucky in another account where I bought it. The other thing I liked about it is it fell from $340 to about 80. It's up in the mid 90s now, but from $340 to 90 seems like a place to be looking to maybe pick some up. So another high dividend stock that I picked up was Altria Group, ticker symbol MO. I paid $447.15. It's paying like 9.5% in the dividend. I think Altria is a good company. If you have an issue with cigarettes, I totally get it. You don't have to buy it. But I like the dividend. I think the company makes plenty of money to cover that bill. And just one I thought rounded out the account well. I bought 4 shares of Exxon Mobil for $422.32. Exxon and Chevron, I didn't buy Chevron in this count, but are 2 great oil and gas companies. I think Exxon's paying about a 3% dividend as well. They've gone to more stock buyback instead of dividend purchase. I don't really love that. I think it benefits the CEO and the heads of the company more than it really helps typical small investors. Maybe they like it too because there's some tax benefits to that. But Exxon's a great company. I don't really see them going anywhere for a long time. Even though places are turning electric, there's a lot of space that still needs oil and gas. I bought 6 shares of Archer Daniel Midland for $443.16. Great company. I'm not going to go into detail about it, but I think there's a lot of growth potential with them. Then I bought 2 shares of Caterpillar. I think Caterpillar's in a great space. Forgive me as I stare at the police helicopter going above. I spent $505.22. What I love about Caterpillar is I don't really see an ability for a company to come in and just start competing with them. Like, it would be really hard to come up with the money to just start building bulldozers and things like that. They're very expensive to build, and then you'd have to build the brand and everything else. I just think they have a good stronghold on that industry. And as long as we're building homes and whatever else, they'll just be there for it. And whenever the government needs to put in new roads or this or that, I think Caterpillar's involved. And the last on my list, in no order, so really it doesn't matter, and it's a little bit of shot was 3M. I paid $475 for 5 shares of 3M. I just think they're oversold. They have a lawsuit going on. They pay a good dividend. It's a great company. They've got something like 2,000 different products that they sell. You guys may know that they do Post-its and air spray, and I mean, they've got so many things as well as medical and a ton of stuff. Pay a decent dividend. I just feel like it's out of favor and oversold because of what's been going on. So thanks for watching. I hope you guys made it this far. I'll do my best to put in chapters for all of them and mention which one. I'll find a day, whether it's Sunday or Monday or Friday each week or every couple of weeks or once a month or whatever makes sense with the channel, to go over the portfolio and let it what its value is and what's been going on with the different stocks. I hope you guys find it interesting. Like I said, I love this stuff. Um, Feel free to let me know about a stock you like that I missed or should have included. Again, I try not to buy too many stocks in a portfolio because then you might as well just buy an ETF. My goal is to narrow it down and try to outperform the funds and everything else. Sometimes I do, sometimes I don't, but I feel like if you buy the best of the best, you should do better, and you don't get a mix of the stuff that isn't so great. Now, you're probably not going to pick up that one that does incredible that you forgot about. So I get that. But I feel like if I pick really good companies, I have a good chance of outperforming. So again, do me a favor, if you haven't subscribed yet, hit the subscribe button, hit the like button. If you made it this far, let me know. Put in there like I made it to the end and you told me to say so. Hopefully at least one person does, but maybe nobody does. Have a great day.